Okay, good morning, everyone. Thank you for joining me for today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you guys today. So today we're going to go through a number of interesting things. To start it off, we're just going to go through some of the fundamentals, some of the key things that are affecting markets at the moment. Then we shall go through gold, see what are the few things that are moving gold, and then we shall go over the DXY, see where the DXY is at. I know the dollar index affects a number of things that we trade, and then we shall wind it up with looking at the Bank of Canada and the reasons why the Canadian dollar is right now very, very weak. So let's begin. Uh, One of the things that has been affecting markets, especially within this week, and of course, since the month began, has been the Middle East. There are quite a number of tensions that are emanating from the Middle East. And the tensions also between Russia and Ukraine are still active, however, not as high as the ones between Iran and Israel. So, of course, some of those are the reasons why we've been having a lot of, uh, you know, uh, uh, very, very sharp or indecisive movements on a number of things. Also, one of the reasons why we have been seeing gold moving higher. However, gold's rally seems to have found a bit of a pause. Gold had been moving in uptrends of between 4 to 5%, but now it's ranging between, I think, 2,600 to around 2020, and we're yet to see it moving higher. Now, moving over to other things, the ECB is supposed to meet next week, and they're expected to deliver the first, uh, to deliver a rate cut. I think the first rate cut this half of the year that began in June. So we are waiting to see what kind of impact we get from the market regarding that. So keep an eye on the euro pairs, especially as we go into next week. We're likely to get some good movements there. Okay, so these are just some of the calls that ING analysts are saying here. They are saying that United States, after September's 50 basis rate cut, the Federal Reserve is likely to move more consciously from now. Official data suggests strong growth and robust employment gains, but surely, but survey evidence indicates the situation isn't as rosy as caution is warranted. We still favor a soft landing scenario amid cooling inflation fears and the Fed cutting rates to 3.5%. So, if you look at the recent data we have got for the recent data we have got for the inflation, we've seen inflation yesterday seems to have hit a stalemate. It's not increasing, it's not decreasing, it's just there. And if you look at the NFP numbers, we got the NFP numbers were actually quite strong. And initially, some of the reasons why the Federal Reserve had said that they needed to act quickly with cutting rates was because they were seeing a very slow jobs sector. But now, after the recent data we have got from the NFP, it's giving the markets an indication that we could see the Federal Reserve delaying with the rate cuts. Now, it could also be one of the reasons why we are seeing a very strong dollar. If you look across the board, you're seeing that the dollar is actually strengthening. DXY is currently trading at about 103. Just last month, it was at about 101. So we are seeing a very strong dollar at the moment, and all that is because of the recent data we've been getting. Now, the euro has also been under a lot of pressure. Euro USD currently has dropped to about 1.09, and the expectations of us getting a rate cut from the ECB next week are high, which of course is adding more downward pressure for the euro. Now, the other thing, of course, is that ING is also indicating there that the European economy is rapidly losing steam, with growth likely coming to a standstill in the winter months. Winter months, of course, now we are now in Q4. Uh, the winter typically starts. I think if it usually starts early, it starts around this time of the year. But by November, December, we are now fully in the winter season, and they are saying that this could affect economic growth around that time. That would possibly see us seeing a weaker euro. Now, of course, the other thing is that to stem the expected weakness in the economy. Uh, the markets are expecting that the ECB moves quick with a rate cut, especially next week, which is in October, and they're expecting that that the deposit rate could also drop to about 2%. Now, going over to the UK, the pound has also been under a lot of pressure. We have been seeing the pound actually declining quite a bit. The Bank of England indicated that they are not going to, in that recent meeting, they said that they could consider rate cuts in the future. The last rate cut they did, I think, was in April, where they cut by about 25 basis points. And ever since then, we have not gotten a rate cut from them. Now, if you guys are trading the stock indices, I'm sure you must have observed that the stock indices have been performing quite well. Uh, Across the board, we are seeing a lot of central banks talking about stimulus. China has said that they are going to provide stimulus packages to low-income groups, but also they recently launched a very massive stimulus package to boost the economy, and all that is now flooding into the other markets. Yeah, so looking at FX here, we can just summarize it saying that the dollar is on a firmer footing compared to where it was a month ago. A more volatile geopolitical backdrop can keep it supported, though the presidential election will become increasingly important. Yeah, let's not forget that we have the election around the 5th of November, and that could also put pressure on that dollar especially. So if you are a swing trader, you should be aiming to start looking for buys around this time on your pairs, especially on things like Euro USD, where we are seeing it currently trading in a massive discount on the month. So let's cross over to something else. Okay, I think this has been covered. This has been covered as well. Okay, so this is just something brief talking about the recent jobs report we got from the Fed. We are seeing here that the blowout US jobs report on Friday, that was last Friday, prompted the kind of hawkish repricing in rate expectations we thought would have materialized over a few weeks. Now, what this means is that they are indicating that after we got the NFP report, we had thought that the move higher for the dollar was going to be gradual, but it did a weeks long move. It did that in just a day. Okay, so you can imagine after the NFP report came out, we saw a very sharp pump for the dollar. We saw it rallying from about 101. It pushed all the way up to 102, and currently dollar is trading about 103. So we are seeing a relatively stronger dollar at the moment, and that could definitely play some factors going into the next few months. Okay. Now regarding rate cuts, what can we expect regarding rate cuts? So at the moment, the Fed cut interest rates for the first time since 2020. They did that last month. They did a 50 basis point rate cut, and the rate reduced. Initially, after the rate cut, we saw a relatively strong dollar, but then the dollar lost value, and now we are seeing it now recovering its value after the NFP. Now, next month, which is the November, we have the US election, which is going to happen in the first week of November, around 5th November. But then after that, we also have the Federal Reserve meeting. And the expectation is that based on the strong economic data we are seeing from the US, the Fed is likely to go slow on rate cuts. So now, could that be one of the reasons why we are seeing a strong dollar? Very likely, because now the market is already repricing, and we are seeing how that is affecting the dollar. So, on one hand, when I look at the DXY looks quite stable where it's at. But then again, when I look at the DXY on a relatively bigger picture, despite us having strong data from the US, it still doesn't give me too much confidence that a DXY will stay on an uptrend. Okay, because when I look at the retail and institutional positioning, right now it's that we can expect a weaker dollar currently. Positioning wise, retail and institutions are positioned for a weak USD, so we should see that play out over the next few days. Okay. Now moving back to the article, it's saying that the inflation figures released this week, CPI and PPI, should not really change the picture for Fed pricing and the dollar, as some substantial surprise would be required to draw attention away from the rather strong jobs report which we got. Our economists see September core CPI slowing back to 0.2%. Of course, we did get a relatively weak report yesterday, which is one of the reasons why we have the dollar stalling around here. Okay. So this, of course, is a BOS, a level of structure that we expected the dollar to break. As you can see, we failed to break that level. And if you look at the external structure for the DXY, you can clearly see it's on some kind of a downtrend. The big picture is actually a downtrend, guys. If you look at it on a big picture, you can clearly see the dollar index is actually trending lower. And it could also be okay to say that there is a bit of struggle at this level here. If the PPI which is coming out today, as we'll see on the calendar, if the PPI that comes out today is relatively stronger for the dollar, then it's possible maybe the dollar could rally above this level to move up here. But again, if it doesn't, or if we do get a relatively weaker PPI, the dollar could continue on a downtrend. Okay, and we could see it moving this way. So let's go into the calendar for today. So today we had GDP for the UK. GDP came out. We had, this is monthly GDP. It came out a bit previous actual. Yeah, so the actual was 0.2%. That was relatively strong, a strong GDP number for the UK. And currently, if you look at the pound is looking a bit strong. It's holding its level there, and it should recover from those levels to move higher. Looking at the GDP year over year, we also saw it an uptick of about 0.1%. This number was revised, however, from 1.2% to 0.9%. So, basing on this revision, I would say that it wasn't that much of a surprising number, which could cause the pound to buy. And our focus now moves to the core PPI. So, PPI is coming out at 3:30 p.m. Sometimes CPI comes out before PPI, sometimes PPI comes out before CPI. I don't know why it keeps changing, but here we have PPI coming out after CPI. Now, this PPI is definitely going to have some good moves on the market. You might want to keep an eye on gold, which we are going to talk about just in a few minutes. Then you'll also want to keep an eye on things like Euro USD and GBP USD that are likely going to they're going to react to this PPI. Yeah. So if we do get a higher PPI, previous is 2.4%, forecast is 2.4%. PPI core is expected to decline from 0.3% to 0.2%. PPI headline is expected to decline moderately 0.2% to 0.1%. So if we do get declines, then that's going to weaken the dollar further. Okay. As you can see, the rally for the DXY seems to have stalled. We seemed to fail to break this level of structure here. And if anything, maybe dollar could start decelerating moderately. Again, guys, the dollar cannot sharply sell. Even on weak data. We got weak CPI yesterday. The dollar did not sell. It stayed up there. So it's not too weak. It's not too weak and may not react too much to weak data. Okay, let's move to the Canadian dollar now. So I don't know if there's anyone who has been trading USD CAD by any chance. If you can, maybe you can just talk about it drop it there in the comment section and tell me what you think about USD CAD. But USD CAD has been on a very, very strong uptrend over the past few, I would say, from 18th September till date. Those about 1, 2, 3, 4, about 4 weeks. It's been on a rally to the upside. Now, I just found something interesting. If you check trading economics has something interesting, guys. When you go on, when you search for a currency pair like the Canadian dollar, rather, if you search for a currency like the Canadian dollar, it normally provides a forecast. This forecast is based on it's indicating it's saying that the USD CAD increased 0.0046 or it increased 0.0046 or 0.33% to 1.3755 on Thursday, October, from 1.3710. Okay. And it's saying here that the Canadian dollar is expected to trade at 1.36 by the end of this quarter, according to Trading Economics Global Market, global macro models, and analyst expectations. Looking forward, we estimate it to trade at 140 in 12 months' time. Okay, so What it's expecting is it's expecting a slight drop in USD CAD, but very moderate to 1.36, and then from that it's expecting it to now rally to 1.40. And all this is based on expectations. Now, if you look at the USD CAD, let's look at it on the 5-day. This is the monthly. I wanted a relatively smaller time frame. I don't know why it's giving me the monthly. Okay, let me work with what I have. So now when you look at the USD CAD here, we'll look at it more on the on we look at it more on the MetaTrader, but it's been on a rally. So this rally is due to a number of factors. One of them is the relative strength in the United States dollar, which is majorly due to the strong economic data that has been coming out. The other one is due to the expectations from the Bank of Canada. So the Bank of Canada has indicated that over the next few months, it could possibly cut rates at a much faster pace. We're expecting a 50 basis point rate cut in the month of December. Okay. Now, if you look at the current interest rates for Canada and the US, you'll notice here that they are trending around the same levels around here. Okay. The one for the US is currently it's the one for the US is color gray, and it's currently at about 4.75 to 5%. That's a target range. And then we have Canada, it's at around 4.25%. Now, it's now a race to, we can say that now the race is on for who will cut rates faster. So the direction for USD CAD is dependent on who cuts rate faster. When you look at the two central banks, the one that you can see which is expected to cut rates faster than the other is Canada. Because already we already looking at the data we are getting from the US, it's unlikely that the Fed moves quickly with rate cuts. And it could also be one of the reasons why when you will see on MT5, USD CAD has been rallying non-stop. Like it's been literally rallying non-stop from 18 September till now. It's been on a linear uptrend with very minimal pullbacks. And I don't know if there's anyone who got affected by that price action. But usually, when such movements happen, it's important for traders to understand, and that's why I brought it up as a topic for discussion today during a snapshot. Okay, so here we have an article from a website here. It's called the Canadian Mortgage Trends, and it's saying here that the CBIC forecast a supersized Bank of Canada rate cut by the year end. So we're talking about something called supersized. Supersized meaning that it's going to be a more than average rate cut. Okay, so a massive rate cut. So in terms of again, the markets are forward looking. So if traders are expecting Bank of Canada to cut massively or to take one big rate cut, it can definitely reflect in the price. That's why I'm seeing likely USD CAD is rallying as high as it's rallying. So CBIC here is we are predicting the Bank of Canada could introduce jumbo rate cuts as early as December. Jumbo rate cuts is where they cut massive rate cuts. You're doing 0.5% rate cut per meeting. Okay. And they are targeting that by April next year, they could see their benchmark rate at about 3%. So if you're a USD CAD trader, keep an eye for what could come out, as they can expect that over the uh, next few months, the rates could get lower. So these are a number of commercial banks in Canada, and they are also putting up what they expect the rate cut to get to. So here we are seeing 50 basis point rate cut to 3.5%. From here, Royal Bank of Canada is saying 3.75%. That's after 25 basis point rate cut. TD Ameritrade is also indicating a 3.75% rate cut. So most of the banks are that the Bank of Canada is going to act quickly with rate cuts. All right. Guys, if you have any questions, kindly drop them and I'll come back to them. So now let's cross over to the MT5 and see. Now, before I cross over there, I just want to talk about gold briefly. And I want to use my trading view since this is where I have a very nice gold chart. So this is gold at the moment. let's just see what gold is doing at the moment. So now gold, yesterday, of course, we saw gold trading lower. And of course, this move lower for gold was majorly because of the CPI data we got. But gold has been holding this demand zone very nicely. And the idea for trading it has been looking for buys in that area, in that demand zone. Yesterday, we saw gold rallying moderately below it before recovering very sharply to move higher. Then again, we saw gold again moving lower, and now we are seeing gold trading at 2,640. So, ideally for me, especially after yesterday's CPI, I would be looking for buys on gold without a doubt. I'm already very used to the kind of price action gold normally exhibits, where we typically see very sharp swings back up after news. Gold again is not dissuaded by the data we are getting from inflation and also from the US. We got NFP, very strong NFP. What did gold do? Just merely sharply sold, sharply bought. Yesterday, CPI, same thing. Sharply sold, sharply bought. Now, take note also that the fear index is also still elevated. The war between Iran and Israel is not done. For those that may not be aware, I know we do not really keep keep up to date with what's happening in the Middle East because we don't really need to do that like constantly. It's enough to know that there's a war. Now, how can we trade through that war? Okay, so this area is a very interesting area for gold. If the PPI comes in higher, I'm thinking gold is going to try again to sell. We should possibly see it testing that demand zone one more time before now recovering again to move up. Now, it's not going to move that high, but it's going to keep having those swings. Sharp sell, sharp buy, sharp sell, sharp buy. Now, taking into account that we are also a few weeks away from the election, there's an element of risk that is that is connected to the election. I would say the US election risk, it's there. Not too big, but it's there. So gold is definitely, it could also possibly be staying within this range because it's expecting that the election could definitely provide a bit of uncertainty. Now, the other thing, of course, for us to observe is that despite the rally that the dollar has had, gold has still stayed where the dollar was when the dollar was at 100. So, which means the entire rally which the dollar has had, gold has not even reacted to it, even one bit. So that tells you something also about gold and how you need to change your approach to trading it, especially if you're tying dollar to gold. If you're tying dollar to gold, definitely by now you'd have said there's a problem because dollar has been rallying and gold has stayed in one place. I think you can all see, if you check on where the dollar was on the 18th of September, gold has stayed in one place. Yeah, from the time when we got that rally. Okay, so let's cross over to the MT5 and see what's over on the charts. Ooh, Apollo, I think I'm going to get you, Apollo. Thank you so much, Apollo, for tuning in. Oh, thank you so much. Thank you for tuning in for the snapshot, Apollo. I think I'll get your questions in a moment. So now let's move to the MT5. Now on the MT5, I'm not really going to go through too many things. I think maybe just to for us to see how since we last met how far the markets have moved. Now if I start with Bitcoin, Bitcoin is still in very massive accumulation. Okay, we have been in accumulation since 11th of since February to date. Bitcoin has been in one place. So ideally, I don't know if there's anyone who has been day trading Bitcoin, but by now there's no way how you can actually trade this thing in a way that is consistent because it keeps moving up and down. The idea with it is that maybe you just need to swing trade it and you're holding a trade maybe for like a month or two. Okay, that would maybe be the best way to approach it because we are seeing Bitcoin really, it's been stuck in this box since Feb. It's been buying off the lows, breaking below the lows a couple of times before moving back high. It's going to have its time where it will have a massive rally, but not now. The market is not really on Bitcoin at the moment. Now, this is Dow Jones. So the Dow Jones on the last met, we had said it was Nadava's box. I was expecting a bit of a pullback before moving higher. The pullback didn't happen. But what I'm seeing here is that we seem to have gotten a break above that box. Let me just remove this arrow here. There seems to be a break above the box, okay, indicating that maybe uh, the Dow Jones could possibly be starting a new rally from that area there to move towards 43,000. Now, going into the election, I know that there's going to be a bit of uncertainty about what happens with the outcome, but I do believe also that the market pricing wise, we are looking at a bit of uh, there's still a bit of risk and greed in the market. The risk one is still there. So we could possibly see Dow Jones moving towards 43,000. Of course, from today's PPI is definitely going to affect it, but not too much. But before end of October, we should definitely see a potential aim for the move that way. Okay, yeah, we're now successfully out of our box. The idea was to buy at the bottom of the box. We've gotten out of it, and now we are possibly now moving to the next move, which is somewhere out there towards 43,000. Now, when I look at the Nasdaq, Nasdaq played out nicely from when we met on Wednesday. There have been a number of events that have been in the markets. I don't. It wasn't really on the topic today about Tesla, but I spoke about it. I think on Wednesday, Tesla has put out made a number of announcements. Said it's going to put out a robo taxi. Somebody's calling a robo taxi. Then there's a cyber car or cyber cab as they call it in the West. They normally call them cabs. For us, this side of the world, we normally call them taxis, but it's the same thing. So they have added to their line of cars, and they're expecting to roll out these cars soon for the public to use them. Now, when I look at the Nasdaq is, of course, broke out very nicely there to the upside, bounced off our rising trend line there very nicely, but it's still having a struggle to move to the highs that we saw. I think it was around April, if I'm not mistaken, around July. Okay, so this is where I'm expecting Nasdaq to head to. If I extend the line after the breakout, we should see it possibly moving towards 20,700 over the next few days. There could possibly be a gap higher on Tesla today. Towards There could be a gap higher on Tesla towards $300 that could possibly support the Nasdaq to move higher. So I'm still bullish on the Nasdaq. Right now would be a, a very bad time to be bearish on Nasdaq, guys. Yeah. These tech companies up to a lot of things. AMD is also making a lot of progress. Nvidia said that they're going to now set up a chip factory with Foxconn, where they're going to be manufacturing chips for their Blackwell product. So right now may not be a good time to be short on a Nasdaq. Fundamentally speaking, there are a number of things that could see the Nasdaq pushing higher. Yeah, but there will be some pullbacks here and there. Should see it pulling back here and there. So I've already spoken about gold. So now this is GBP/USD. So the data we got for this morning at 9 a.m., the GDP data was quite impressive. Not trying to really a very big, massive, impressive number, but I would say moderately impressive. The GDP increased, and of course the pound positioning wise, institutions are not short on the pound; they're actually bullish on the pound. So I would expect us to see a recovery there for the pound. If the PPI comes in weaker, the pound could attempt to rally back to that area there. And we should see how that possibly proceeds over the next few days. Yeah. So uh, again, if you look at the demand zones, we are currently in a demand zone for the pound, slightly below the 200-day moving average, but in a rising channel and a very bullish structure there. So the buying should start from there for us to see the next leg up on this pair. Now, Euro USD also has bounced off that descending channel, my equidistant channel there, and we seem to be seeing it rising off, of course, also into this demand zone that I recorded there. So we should see Euro USD also rallying. We should look for a buy there, possibly towards 1. 1.10, and we should hold our buys into Monday with a stop loss slightly below this demand area here. So I'm bullish on Euro USD. Now USD CAD. Now if you look at USD CAD, this is what it looks like. This is almost like an algo. If you look at it, it's actually quite it's quite impressive how this thing has been rallying. But if you look at it, you'll notice that the rally has been on a straight line, almost like a linear trend. Okay, this is USD CAD. Some of you may think this is a meme coin. This is actually USD CAD moving like this. So if you look at it, you see how it's been moving. The pullbacks have been almost like it pulled back, it pulls back, and then after pulling back, it rallies again. So that's how it has been moving like that. It's yeah, and it's really hard to say now where this continues, but this could also be because of the Bank of Canada is expected to cut to cut their rates in November and December. It could possibly again allow USD CAD to rally more. So yeah, so I think let's just keep an eye there to see what happens with this particular pair. Yeah, so I think that's it for today, guys. If you have any questions, now you can send in your questions so that you can go over them. I'm sure a number of you have questions. Now, also just to speak about USD CAD, you also see here is where we have our golden cross. The golden cross is there. We had a golden cross on the 10th of October. And after the golden cross, since we had that golden cross, we've seen a rally of about since we had a golden cross, which is somewhere around here, USD CAD has added another extra 72 pips. Yeah. Okay. All right. First question, Apollo, how are you doing? I hope you're doing fine. All right, Apollo, you're saying my feel is DXY will remain strong based on US strong economy, e.g. labor markets has shown strength with inflation ticking up and cost of living being the main concern for the American voter. Yeah, I think so, Apollo, but don't forget that the dollar cannot stay strong on just economic data. We are looking at a policy shift that's been the first in 4 years. We moved from the Federal Reserve cutting rates in 2020, hiking rates in 2020, 2022, and now moving back to cutting rates in 2024. So in terms of positioning, a rally for the dollar is not really the best thing that is likely. Short term, possibly maybe a rally is there. Medium term to long term, if we're looking at it, maybe a couple of weeks from now, a month from now, 2 months from now, we will start to see that weakness in the dollar materializing. Okay, Apollo, you're saying Fed may keep the interest rate higher, making the DXY stronger as compared to other major currencies. I choose to be wrong here. Yeah, of course, now, if you look, one of the main reasons why the Federal Reserve had to act quickly with cutting rates, and Powell also mentioned in the conference that was there in September, that the Federal Reserve should have actually cut rates in July this year, and they just cut in September. That's like 2 months after they thought they would cut rates, but they were not expecting that the economy would slow more than it did at that point in time. So now they realize that it was actually earlier. Had they known what would happen to the US economy in August and September, they would have actually cut in July. Yeah, but uh, now that they have cut, it's very likely that they might not want to delay their rate cut on only 1 month of data. So which means in November the cut will likely happen, and that could also weaken the dollar. Yeah. How do order blocks work on support and resistance zones? So ideally, when we're using order blocks, the last time I explained this, I said when you're trading on FX Pesa's platform, you don't have access to bid asking balances. You don't have access to the actual order book of trades that are being opened. Now, ideally, what you do if you want to understand order blocks is you're supposed to use an exchange to be able to see typically what happens on a candlestick chart whenever you have certain blocks of orders being filled through the market. Okay. So for instance, if you have maybe BTC USD on a crypto exchange, and you have maybe 100 Bitcoin, 200 Bitcoin orders for a buy, okay, you're going to find that the market is going to hesitate to sell below that zone where there's that order block, right? And when you look at the candlesticks, what the candlesticks look like at that point in time, they typically look like this, okay, where you have a very long wick, where you have the very long wicks, and if the wicks are many at a particular level, then we can say that there's an order block there. So that's typically how the order blocks are formed. Now, you know that when we talk about a support level, we are saying that there's a lot of buying off that level. That typically means what a support is. Support is an area or a zone where price action bounces off, okay, or where price action fails to sell from. That's where we call a support. So in idea of order blocks, we are saying that if you have multiple candlesticks off that level, then it typically means that there's an order block. Just as simple as that. Yeah. So now you need to identify ideally where those order blocks are on the chart. Oscar, you're saying what currencies, I think that you meant have more weight on yesterday's CPI and employment data. Yeah. So in terms of the currencies, we're talking about currencies that have the US dollar, because that CPI and employment data we're talking about in this particular case is the US data, right? So which means anything that has the dollar. You're looking at things like USDCAD, USDJPY, but most importantly, the ones that typically react the most to CPI and NFP, Euro USD, GPP and gold. Those are the ones react the most. Yeah. And those should be the ones that you have your focus on. Our next question. NZUSD. It's been a long time since I checked out that chart for NZUSD. Can I just pull it up quickly? Now we had an interest rate decision just this week. The Reserve Bank of New Zealand met this week and they decided to cut the interest rates. So that's one of the reasons why we saw okay, I need to remove some of my things here. Let me knock out what. Hey, which one should I remove? I think I can remove AMD from here. Okay, let me remove Broadcom, as I need my AMD chart there. So when you look at NZUSD has been on a bit of a downtrend because of the decision that was taken by the Reserve Bank of New Zealand. They decided to cut the interest rate recently. So I think they cut their rate somewhere around here. Yes, it was here. Actually have it here. So I think you can see that. The news is actually right here. Actually, there's a time when I was actually adding pictures to my charts. Okay, I think it's going to be shared in a moment. I don't know why my MT5 is stuck there. Okay. All right. So I think that's the New Zealand chart. So here we had the Reserve Bank of New Zealand. This was on this headline here. This was on Wednesday, 8th of October. 8th of October was when? I think 8th of October was Wednesday. Okay. So headline here is New Zealand. The New Zealand Central Bank slashes rates by 50 basis points in second straight rate cut. Okay. So 50 basis point, that's a jumbo rate cut. That's a massive rate cut. And soon after they cut the rates, you can essentially see that the reserve the New Zealand dollar took a hit. Okay, we saw it actually selling from that level, and at the moment there's a bit of recovery there. Okay, so of course, looking at it on technical terms, I can see that there's a bit of a structure break that has taken place there, and there seems to be a bit of recovery to these areas here. So I would be looking for a buy, but I'd want to keep an eye on the DXY. The DXY weakens today, then there could potentially be a potential move here to the upside. Yeah, but it has found a bit of support at this level that could allow the price to recover. Yeah, that's what I can say briefly on USD card. US oil. US oil, I really don't have anything on US oil. I know that it is now trading closer to its 200-day moving average, and we have to just keep an eye to see how it fares from there. But oil is going to react more to what's happening between Iran and Israel. So I wouldn't say it's more prone to volatility up or down due to the tensions that are happening between Iran and Israel. Yeah. So there's no clear cut way to approach oil. Yeah, you have to just follow the news. That's one way. Okay. Next question. What impact will the US election have on the markets? Okay, now for that, there's so much. We are going to have a Twitter space on the 29th of October where we're going to be discussing in detail. I want to give you something that's concrete, so I can't give you that now. Just keep following on the FX Pesa socials, and there will be a communication regarding that where you will be able to get to know. It's going to be a speakers that are going to be put together that will talk about the impacts on the markets from the US election. Yeah. So Junior, just keep watching FX Pesa's socials. Next question. Which will be the best currency to pair with the USD depending on PPI? I think I've already mentioned that. I've spoken about Euro USD, gold, and GBP USD. Okay. Yeah, those ones I already spoken about that. Mr. Patrick Wangari. Those are the best ones to pair. From a monthly to weekly time frame, you see dollar looks bearish. What is your major bias? Definitely. Malomba, I agree with you on that. Yes, I agree with you on that one. My bias on a dollar is bearish. Both looking at it from a technical perspective, but also approaching it from in terms of a standpoint of positioning. Okay. Retail and institutions are positioned net short on the dollar. So I wouldn't get too convinced with the dollar moving way up, taking into account that there are a number of things that could allow it to recover. So my major bias would definitely be a sell. I can say that confidently. Yeah, basing on technicals and fundamentals. Yeah. Medium term to long term though. Yeah. Short term, it could recover, could keep moving up. Yeah. All right. Apollo, you're asking about BTC and ETF inflows. Again, there's I wouldn't say there's really much of a connection between the two. Sometimes it does react to ETF inflow, sometimes it doesn't. So you might just really want to focus on the price action. Yeah. And also the fundamental news. We need more news that that so and so is getting into Bitcoin, the ultra rich, the what. Then we also need the retail. There's no FOMO right now in Bitcoin, like we saw in 2021. Yeah, all those things are factors that are at play. Yeah, on BTC. All right. uh Thank you so much, everyone. Thank you for tuning in for today for FX Pesa's market snapshot today. And of course, I wish you guys all the best with trading ahead. We have the PPI at 3:30. All the best, guys. Cheers and happy trading, guys.